despite higher valuations, India has done well. And I think the reason is very clear that India's ability to drive higher return on capital, the company sectors, and higher earnings growth. What today market is saying essentially is that there's clear visibility about the growth of earnings in the future.
Welcome to Season 3 of Well Said, where we explore the cyclical and secular forces shaping financial markets and learn how Wellington investors apply investment research in the pursuit of better investment outcomes. I'm your host, Thomas Mucha. India is a country of big numbers and big contrasts. Home to 1.4 billion people, it's the world's fifth largest economy and one of the fastest growing at more than 7% a year. Income disparity is also big, with the 10 richest individuals accounting for more than 10% of India's GDP. And while 68% of the population lives on less than $2 a day, rapid economic progress has lifted nearly 135 million people out of poverty just in the last 5 years. Now, longtime listeners of this podcast will also know India is very big geopolitically speaking, playing an increasing role in U.S.-China great power competition in particular. Now, India's stock market, which has risen more than 13% a year in U.S. dollar terms over the past 3 years, is now the fourth largest in the world. Joining me today to talk about India's big numbers and investment opportunities is Niraj Bhagwat, a Wellington portfolio manager based in Singapore. Niraj joined us last season to discuss the broader Asian markets. Today, we're here to talk all things India. Niraj, welcome back to Well Said.
Hi, Thomas, and it's great to be back. Thank you.
So, Niraj, you just returned from a research trip to India. So tell us, where did you go? What changes impressed you the most since your last visit?
Yeah, so me and my team, we spent about 2 weeks. 1 week was in Mumbai. We actually took some clients of ours along with us. And 1 week, we did do this annual road trip. So going outside in the interiors, and we did that in the interiors of the state of Maharashtra, which is, the city is Mumbai, but we're going outside. And across those 2 weeks, we met listed company managements. We met a lot of small businesses, unlisted, met farmers, students, met politicians. So it's quite a trip. I would say 3 things that really struck me and kind of different from the last time. Firstly, it is so all pervasive. It doesn't matter who we met. Everybody had a positive sentiment about the future, really have a strong confidence about the future. You could see economic sentiment and growth really percolating to smaller towns, which is very good to see. And a general feeling among almost everybody that politically stability will be here for the future and they can really look forward. The second thing which I was really impressed with is the infrastructure. Off late, India has really begun building infrastructure, and major infrastructure projects are really happening. So we were lucky to be on the coastal road in Mumbai, which is not even open yet, by the way, but we are lucky to see it. And it's a road which is connecting the south of Mumbai to north and cutting down distances by half. I went on the longest sea bridge in India, which is just recently open, again connecting one part of Mumbai to another. And while going in the interiors of the country, I went on this big highway which connects Mumbai to another big city in the middle of the country, Nagpur. And frankly, I've never seen such a highway in India. It's almost comparable to almost any large road or great infrastructure project anywhere in the world. And the third thing, which is quite remarkable, which I've never seen in India before, and we do this a lot, we meet a lot of students. So we met this MBA students. And what was remarkable was these guys they were just about to pass out and they all got good offers from companies. They all wanted to be entrepreneurs, every single one of them. And hardly any one of them had family businesses to inherit, and all of them were from middle class. And that was such a remarkable, I'd never seen this before, that 100% wanted to be entrepreneurs, and such a big difference from my road trip in China late last year, where everybody wanted stability and wanted a government job. And I thought that was remarkable because that in any country with the youth look forward to the future with great confidence, that bodes well for the country.
So I'm glad to hear you mention the infrastructure situation in Mumbai. I've spent too many hours of my life in the back of a cab in Mumbai, so glad to see that's moving in a positive direction. And, it is interesting that India's ability to dive into these massive projects, that's pretty striking, given how hard the country seems to navigate, at least to outsiders. So in your mind, Niraj, what is it about India right now that's producing such great companies?
I think you should take a step back. So, if you think about historically, India, like you remember your cab ride, India found it difficult to execute infrastructure projects. And for a long time, India has always been a place where there have been a lot of business minded people, capitalists really thinking. And in an environment where there was high cost of capital and a high cost of doing business in general, where businesses had to be having a great competitive edge and generate high returns to be in business. And that really created great returns for shareholders like you and me, and created great companies. And we obviously know the Indian IT services story, which has been successful. But another fact I'll give you is that despite having a per capita income of $2,500, India boasts of some of the largest banks in the world by market cap. India has, I think, the second largest or maybe the largest motorcycle manufacturer in the world, and which has large market shares in global South markets. And I can go on with these examples. So that's been the history. But I think some of this ability to execute the infrastructure projects is changing. So you take the coastal road I talked about, for example. It was in the planning stage for 30 years. And finally, the government got its act together. And now in the last 6 years, it's been built. And last 6 years, despite COVID interruption, take something like digital infrastructure, which is very important. And there's been a tremendous leaps and bounds improvements in financial inclusion. And all that has happened in just one decade.
Yeah, so the focus on infrastructure is a multidimensional aspect here.
That's right.
So let's translate some of this dynamic into market performance. And one of the things that strikes me about India, Niraj, is unlike the US, where recent gains are mainly due to the 7 largest tech stocks, India's market rally appears to be more broad-based. What do you make of that?
If you look back at the heart of it, India is really a simple story of a low-income emerging market going up the development chain. There are 100 million people, which are rich people or the upper middle class, consuming the discretionary items, which we all know. There's a large group of 200 million people, the middle class, which is aspirational demand. And then a large group of billion plus, let's say, of people who are lower income or poor, who are offer great growth opportunities, even at the most basic level, the basic needs and staples. So it really offers growth opportunities across sectors. And what has happened in the last 10 years is that access to capital for smaller businesses and startups has really improved. So, for example, India is, I think, the third largest startup ecosystem in the world already. Last thing I would say is that something unique about the breadth of companies on offer for investors. So just like any other emerging market, India has a lot of family-run companies. India has obviously government-owned companies. Increasingly, there are more and more professionally run and owned companies. Because of some historical reasons, India has a large collection of multinational subsidiaries which are listed in India. And that's why the whole growth in markets has been broad-based. And let me give you a stat. So in the last, I think, 5 years, the growth in MSCI India has been 16% compounded, and the rise in small caps has been 22%. And you talked about the concentration in the US, you look at concentration in India. In the last 5 years, if you take the share of the top 10 companies in market cap has gone down from like 35% in 5 years to 26%. It's gone down.
Yeah, that's quite a contrast there. Well, obviously, no conversation about India can ignore the size factor. India is, of course, the world's largest democracy. I mentioned 1.4 billion people in my intro. And I've heard you say and other people say that there's been a steady increase in household investing in India. What effect is that having on the market?
Yeah, that has been a really great tailwind. I think two things have happened. First of all, as you know, we know that India is a very young market. I think half the population is below the age of 30. Now, what that means is that fast changing thinking in the way people invest. I mean, historically, me and my father's generation used to heavily invest in physical assets, gold, real estate. And the younger generation is much more willing to look at financial products. So that's one big change that is happening increasingly. The second thing which has happened because of liberalization, more and more new entrants have happened in the mutual fund market, the insurance market. And because of the last 2 decades, a lot of education has gone into this market where people now understand these products and penetration has happened. So if you think about 30 years ago when I started my career, foreigners or foreign inflows into Indian market mattered a lot. And that's what drove the markets. Now it's incredible in the last few years, foreign inflows in India has actually been flat or maybe until recently negative. And despite that, the market has had a strong tailwind. It's all been local savings. And I calculate that almost $20 billion of annual inflows comes from these domestic savings of mutual funds and pensions and insurance.
Interesting. Well, that level of demand also raises some questions about valuations. Many successful Indian companies, are trading at very high multiples. And yet, even so, the market has outperformed the US, Europe, Japan over the past 3 years. So, Niraj, you're an active manager. What's your strategy for navigating, let's say, this expensive go-go market?
So, Thomas, you're right that valuations at absolute level are high compared to other markets and probably slightly higher than India's historical average. But despite higher valuations, India has done well. And I think the reason is very clear that India's ability to drive higher return on capital, the company sectors, and higher earnings growth. What today market is saying essentially is that there's clear visibility about the growth of earnings in the future. And if you take a step back, I can't think of any large market which has a large growth in front of it, young demographics, just the growth potential, and more importantly, a functional democracy. There are not many markets like that in the world. And so that's incredible. Now, when I also think trying to put this whole thing into perspective, and I try to see where the corporate profitability is. And India's corporate profitability today is lower because of economic cycle changing versus the past. And so I think another way to look at India's valuations is market cap to GDP. And India's market cap to GDP today is lower than India's past peaks. It's much, much lower, of course, than the US, so no comparison. I'll give you another stat of India's market cap. So India's total market cap today, I think, is the same level as Nvidia and Apple. Forget the top seven, just these two companies. That just tells you potential. But I think the way I think of the bottom-up investor is just all these things don't matter to me. What matters to me is really trying to find the businesses which can really compound capital for my clients.
Well, of course, these dynamics are happening within a broader macro context. And I do want to shift our discussion here a bit to some of India's macro drivers. Some are risks, some are benefits. You mentioned before the value of good governance. We do have national elections coming up soon. And it's my experience that election cycles tend to create uncertainty and therefore potentially more market volatility. So how do you think about that, and what should investors be watching as we move closer to an election cycle in India?
Yes, Thomas. So, national elections have been announced and results will come out on the 4th of June. And there's general widespread belief and expectations that the current government will come back and there'll be stability and continuing policies. I think there's a famous saying that a week is a long time in politics, and here we are talking about 2 months. So I think it's a fair thing to say that there's a risk. But I'll go back to India's history and give you another example of what happened. So there, in 2004, there was a similar thing like today where India was entering an economic upcycle, just like today. And there was a government which was, at least the stock market expected it to come back, and they didn't. And on day one, the market really collapsed. Now, if you would have bought the market on that day or kept your holdings, then within 6 months or less than that, you more than made it up. So at the heart of it, India has always been a very bottom-up story and does well despite the government. And the second thing which actually enthuses me for the longer term is on my recent road trip, I saw that as well, where I met a lot of politicians, and I was very encouraged to see that across political parties, the focus is a lot more on jobs, on economy, on infrastructure creation, rather than historically what I used to hear pandering to identity politics or freebies. So that's really encouraging in the longer term.
So part of the evolution of India across the board.
Exactly.
So Niraj, one of the criticisms of the Modi administration has been a perception of democratic backsliding. I'm wondering if you agree with that and whether you believe that might lead to more social instability that you'll have to manage as a portfolio manager.
It's a great question because I think, like you correctly identified, if India's basic structure of democracy changes, then obviously that changes the complete reason for investing. I think I would, rather than give you my view, or I think let's talk about some fact. The fact is that people can talk about democracy backsliding and protest about it in India tells you that there's democracy. There are many countries, as we know, across the world where you can't do that. You can't protest about democracy backsliding at all in that same country. So that's the first thing I look. The second thing I think is that India's institutions, whether you look at judicial institutions or across the board, have been pretty robust and have gone through many challenges. And that's what keeps me very optimistic, irrespective of which political party is doing what. If you look back in India's history, in 1970s, as you know, one of the governments, they scrapped the elections, they announced emergency powers. And basically, they arrested all the political opposition and put them into jail. And the media was arrested, and everything was arrested. So no comparison to today. Even during that time, there were instances of courts ruling against the existing governments, and eventually the government having to resign and announce elections. So I think India could go through that, where all democratic institutions were completely challenged and thrown out, and yet India managed to come out of that within 2 3 years. Unlike many of the countries which succumbed to those challenges and never went back, I think I'm pretty confident that irrespective of what happens in the future, so long as the institutions are strong enough, which India has done for 70 years, I think India will be okay.
Well, Niraj, you know that I pay a lot of attention to Indian geopolitics and how India fits into, of course, U.S.-China great power competition. In my view, it's one of the most important players over the next decade or so in this rivalry between the U.S. and China. India is part of the Quad. It's growing closer to the United States in strategic sectors and other core areas that have a great power dynamic here. I'm curious, though, as an investor, how do you assess the advantages that accrue to India for, let's say, not being China?
At the basic level, the India story today is about a normal economic upcycle, which is now being further boosted by a strong government with, change in infrastructure and all the good things we talked about. Of course, there is no question that given what's happening with the environment with China and the supply chains being shifted, the China Plus One policy, India will benefit to some extent. A glaring example of that is Apple, which has publicly announced that they're moving some of the supply chain. So India is benefiting some of that. And I saw that in my road trip as well. I mean, I went to some of the smaller town and I met a very small gear maker, and they were starting to supply to some of the big industrial names that we know in Europe. And the mandate from them, from their customers was, look, we want to change our supply chain to India. And so just if you can keep producing, we'll give you more orders. So that's positive. I think that's also helping is the current government's policies of production linked incentive scheme. And India is obviously offering one of the lowest corporate tax rates in the world. So new investment gets 15% corporate tax rate. So that's making it attractive for that change as well. The second thing I think, Thomas, about how investors like me or broadly should think about this environment is that India becomes even more attractive because what India offers is in investing in a country which is open to foreigners, where English language is widespread prevalent, but more importantly, it's a thriving democracy and a stable and legal framework, which is very important to investors.
There's no doubt that India is sitting in a tough neighborhood. Pakistan on one side, China, India's longtime rival to the north. Both adversaries are nuclear capable. So how does that shape your research and investment approach? I mean, how do you fit these very difficult, complex geopolitical challenges into your framework?
You're right. I think it's a real risk, the geopolitical risk on the neighbors for the longer term India story. But I think it's important to also think about a couple of changes that have happened for India. India has moved much closer to the US strategically from a defense perspective. And if you look at India's military purchase, defense purchases, India is almost entirely buying from countries in the West. Secondly, India is heavily modernizing its own military and investing in its own defense. So I think, yes, the risks are there, but to some extent, because of these two things, I think those risks are mitigated. More importantly, as a bottom-up investor, that creates opportunities as well. So again, when I started my career, there were no opportunities to invest in the defense sector. Now we have a very growing and thriving defense sector to invest in. And I expect that in the next decade or so, this will be probably the fastest growing sectors for investors to focus on. When I look at the evolution of the US economy, US definitely benefited from the strong growth in the industrial military complex. And I think there's quite a reasonable chance that India also benefits from that as well.
Yeah, China's doing the same thing. Many countries around the world are attempting to do that. I agree with your assumption there about the importance of defense. As India is a member of the Quad, it has to normalize its defense relationships with the other Quad members, Japan, Australia, and the United States, of course. So that trend is very interesting to me as well. I'm curious, though, how are you thinking about India's relations with Russia, which has been a sore spot in a lot of the conversations that I have with national security policymakers? Yeah. India is a member of the BRICS. China and Russia in particular are trying to use the BRICS as a sort of an alternative institutional framework to push back on the US-led international system. So how does that fit in?
I think India will always chart its own real policy and try to maintain its identity. So India will try to be a friend to everybody, and that will not change. So I think India's relationship with Russia, you have to go back a bit in history. And you know this, India was very close to the Soviet Union during the Cold War. And because of the historical reasons, when US was closer to Pakistan, which is obviously supplying defense to Pakistan, India had to buy weapons from Russia. So even when the Russia-Ukraine war happened, India had almost 80 to 90% of its military equipment having been bought from Russia and entirely dependent from spares and service from Russia. So it was not a relationship which, even if India wanted, could break. But more importantly, I think as India has demonstrated in the last year or two, India has been able to navigate these difficult set of relationships. And frankly, even in the Israel Middle East war, where India has been able to have working relationships and probably deeper relationships with both sides of the parties to India's benefit. And I think there's no better glaring example of India buying Russian oil, refining it, and selling it to the Europeans. And India actually benefiting. And who would have thought? I wouldn't have told you this would have happened. So I think what you should expect from India is trying to be closer to the West than before, but always having an independent policy and trying to navigate both sides.
Sure, every country has its own interests. And I agree with you. I think as India's power increases, its role is going to increase, not only regionally, but globally and geopolitically. So it's going to be a key variable to monitor as part of the investment backdrop. Now, another key variable here, and something that listeners of this podcast will know, is climate change. And, India, of course, sits in a very challenging position with regard to climate change. The physical risks of heat, rainfall variability, rainfall extremes, water scarcity, typhoons, all of these things are dangerous. All of these things are expensive. At the same time, of course, India is racing to decarbonize. It's racing to reduce its dependence on coal. So how do these challenges, these long-term structural climate challenges, shape your view, both with regard to India's macro potential and then the company-specific issues?
It's a real thing that to face. But I think as an investor, this is an issue to be discussed over years and decades and not over months and quarters. We also have to ask, what is India doing about it? And like you correctly said, the government is behind trying to change. So there's been massive incentives for implementing solar, wind, and other renewable energies. They just announced incentives for electric vehicle companies to come in and invest in India and electric vehicles to be put up, their whole infrastructure. So you will see more and more of that. And I think if I'm not wrong, India is one of the few large countries which has met its COP26 requirements. Also from a company perspective, and at least all the companies we invest in, almost every company is focused on trying to see how they can reduce their carbon footprint. How can they reduce their water usage? Many of these large companies have net zero targets, which are faster or better than India and many of their global peers. Like, for example, did you know that some of the large cement companies in India have already a better carbon footprint than some of the global majors in cement? As an investor, this risk is real. We look at when we invest in companies, but I think there are opportunities as well.
So Niraj, let's wrap up our discussion here. Obviously, you're bullish on India, yet clear-eyed about the many risks. So what are you hoping to see from India over the next, let's say, 5 years?
So firstly, I would expect a stable government and continuity of policies, which is very important for this positivity to continue. The second thing I would expect is reforms in the agriculture sector. I think we didn't discuss this, but that's another risk, some problem area India needs to solve. Large amount of population is reliant on it. We just talked about climate change, and I suspect that any climate change will affect these people the most. So I expect some real positive policies, which will be good for India. The third thing I expect is that with increasing infrastructure and better infrastructure, the manufacturing share of GDP will go up, which obviously has implications for global supply chains, but for India's progress as well. Lastly, and big picture, I think India will be on everybody's mind. That's what I think. If you think about India today, and you said at the start, India is the fifth largest economy in the world. By the end of the decade or earlier, India will be the third largest economy in the world. And yet today, the India's share of the MSCI global indices is, I think, 1.7% or something. So I think you'll see a lot more focus in India. India will be on everybody's mind, and I think a lot more inflows in the Indian market.
Niraj, we could go on for 2, 3, 4 hours on a topic that's
right.
So rich and complex and fascinating.
We have to come back. You to invite me back again.
I'm going to invite you back. But for now, let's wrap it up here. Once again, thank you, Niraj Bhagwat, an equity portfolio manager based in Singapore. And thanks for coming back to us on Well Said.
Thank you, Thomas. Always a pleasure.
The Well Said podcast is a Wellington Management production. Our producers are Colin Hopkins, Mark Murphy, and Dana Wickstead. Editorial support from Colin Hopkins and Dana Wickstead. The show is recorded, mixed, and edited by Mark Murphy. Animation support from Rasa Sermonte. Production support from Dave Crow. You can listen to Well Said at wellington.com and at most podcast platforms. Thanks for listening.
All investing involves risk, including potential loss of principal. Past results are not a reliable indicator of future results. Forward-looking statements should not be considered as guarantees or predictions of future events. This material was current as of the publication date. Wellington assumes no duty to update the content in the event that the information changes. This commentary is provided for informational purposes only. It is not research that is required to be prepared in accordance with the legal requirements designed to promote the independence of investment research. It is not subject to any prohibition on dealing ahead of the dissemination of investment research. It should not be viewed as a current or past recommendation and is not intended to constitute investment advice or an offer to sell or the solicitation of an offer to purchase any securities. It does not take into account the investment objectives, financial situation, or needs of any particular person. Wellington Management does not provide legal, tax, or accounting advice. The views expressed are those of the speaker and may not reflect the views of others at Wellington. This recording may not be reproduced or distributed in whole or in part for any purpose without the express written consent of Wellington Management. Please refer to the disclosure section of this podcast for complete details.